Well, hello folks, I'm L.A. Little, founder of NeoClassical Technical Analysis, and I want to welcome you to this show where we're doing reviews of stocks that mentors have chosen. We do this once a week usually. We try to post it. It's a kind of a live setting, so a little bit raw, but it's from our mentors who have mastered the model, the NeoClassical model, and what we do is we look at these stocks that they have found through their searches and have decided are probably the best trades they want to pursue, and we look at them and we decide if they are or not and how we would go about it. So that's what this show is. Enjoy the show, and I'll see you on the next one. Okay, so we're going to start here today with this work that one of the mentors does, which has to do with cap-weighted stocks, and I kind of like this, and that's why I'm throwing it on the video. What's most interesting is, if you're looking at the S&P 500 and the components that are in it, and you're looking to see which ones are the hot sectors, so to speak, right? By looking at the trends on the cap-weighted basis, we might be able to get a better read, and that's the whole theory behind this, and we're doing it on all the time frames, daily, weekly, monthly. And so this work that's being done is saying, okay, well, what do these things look like? Which ones are, the hottest ones? And right now, it's XLF, XLK, and XLY are the primary ones. The MTTFs aren't extended. This is the MTTFs we show that are not cap-weighted, if I'm reading this right and remembering it right. Whereas this, is that wrong? Okay. And so this is the non-weighted MTTF that's on the site. This is the weighted MTTF. Sometimes they're quite different. Sometimes they're reasonably the same. But what you can see here in this case is that, they're less extended, if you will, at least two of the three, than what we show on the site just using the trend of that sector. And sometimes they can vary quite a bit. But what's interesting is a lot of times when you get a bullish market, you want to know where to go, right? Because a lot of times you get sector rotation. It wasn't that long ago that we were looking at, if I remember this right, it was XLU, XLLRE, and I think what was the other one? I guess it was technology still back then. But those, XLP was the other one, so it really was the durables and the more safe things, right? But then they eventually got extended and money rotated, and so that rotation that takes place, right, where you come out of these and into those, is something that if you're trading, you're not just holding something. If you're trading them, then you want to kind of rotate with it as you see that rotation taking place. And so I thought I'd just pop this up here. We got more work to do on this, but I still like the way it's starting to shape up in terms of what it tells us. So let's look at the index, though, and see where we're at today. Now, the last couple days, I started talking about, at least in this morning's missive, about the slow roll is what I called it. Where we're starting to get a little bit of a rollover in the S&P and in the other indexes. And the one index that's really been struggling, of course, is the small caps. And yesterday they came in to test, today they came in to test this area, which is the key spot. And so tomorrow will be a big day, I think, here, because if this breaks down, then the small caps are really struggling. You should expect that to hold. And so one of the things that we're always interested, of course, in Neo is what's the trend. In this case, the trend's bullish. And so if we have a bullish trend, and it looks like something's wrong here. I was working on the data this weekend. I might have messed something up. No, it looks like this one. Oh, I see what it is. This one got over that. That one, the one that's got the red arrow, one of them got over one of them. One of them got over the other one. So there actually are two there. They kind of look odd the way it's set up. Usually when they're that close together, you get over both of them. But anyway, the trend is up. But that trend could change, right? How could that change? Well, the way it could change, and the way it already is probably changing, is today you actually broke underneath the retest regen on the top one. And so when you break under the retest regen, in this case it was a full retest regen, and it failed today, it did not regenerate, that says that what was up probably is no longer up. It's probably sideways. Well, the only way you can go sideways is break a swing point low. Swing point lows are way down here. And so this is kind of a warning sign. You know, this doesn't, usually you don't get that kind of a spread on the warning sign. And so it may not end up being an actual trend change, but it does tell you that more than likely this thing's going to continue to range for some period of time. Right now the range is up here, but that range could expand on us. And so that's the small caps. That's the weakest link in the indexes. But as we started to look at over here on the S&P 500, you're already starting to get a little bit of a roll. Now, if you pull this thing back, right, the retest regions here are quite a bit of ways down. And so, you know, as they come into it, because we extended as we went over them, as they come into it, they've got a little room now, you know, to get to the bottom of the trend and still be bullish. And so that bottom, if we look at the numbers, is about 29, what is the number, 2,900? And so we're sitting at roughly 100 points away. So even though it doesn't look that far on this chart, it's actually a pretty good ways down. And so we could get a roll to 2,900 and still be quite bullish, right? You could trade into here and still be bullish. And so if you're not willing to take a 100-point hit, you know, then you probably shouldn't be fully invested. If you are, and you should be thinking about, okay, I want to be able to buy it there. I don't want to be, you know, sweating bullets when I get there, right? So these are the kinds of things you have to think about if you're trading this stuff, or even if you're investing and you know, when you want to try to get a little bit more beta out of what you're doing, you have to be able to look at these things and say, okay, I'll buy when it comes back. And the only way you can buy, if you've already bought everything, is to sell something while it's up towards the top. Now, typically, I always tell you, you know, it's like, okay, when you push up, you get a retrace. That first retrace is usually the best to buy. And so as it comes back, you know, I would be most interested in trying to buy that on the way back, if that's what it does, if it's set up correctly, you know, if it's the first time back and all that business. In this particular case, this was a break of that swing point high. So it actually traded underneath the retest region already once and then actually regenerated to the top side. That's not a common case. That also tells you this thing's a little bit weaker than you think. You know, a lot of times we're just talking about, you know, the second book I wrote was, you know, trend qualification, qualifying trends. This is a qualification of trend. It tells you that, yeah, even though you've got this push up and this thing keeps going up, that doesn't mean that it's as strong as you think, right? Yeah, it's doing what you want if you're bullish, but yet there were some warning signs back here. If it comes back and breaks, it really starts to break down again, then of course you could get a bigger move to the downside. And so you're talking about the ABC targets? Yeah, that's true too. So there was a comment here about the targets. You know, there was an ABCD target here, I know, that was nested, and this one got hit. And this one still hasn't completed. There were some longer ones, I think right at 3,000, if I remember, there was one there, and 29. Yeah, it was right at 3,000. And so, yeah, I mean, we have hit targets, some of the targets on this time frame. There's longer targets out here. And so again, those might set up as a nested, right? If you just look at this, let me see, is the target, I guess in the weekly it would be all the way from down here. So you would be, and it comes to here, and then it goes down, it got redrawn, excuse me, and then goes up here. And so you initially had a C point here, but as you rolled back over, it got redrawn to there. And then it goes up, and I think this one's up around 3,200 or something. Yeah, so there are some longer ones, and there's nothing wrong with the way that this thing's behaving. You know, you stair step up. Matter of fact, if there's anything wrong with anything, it's the way this thing just went straight up. Right? I mean, you know, this V-shaped stuff we've seen so many times. And you know, the flip around by the Fed down here moved it again, and now the Fed saying they're going to cut rates is holding this thing up. But maybe that's not going to be enough, because now it's starting to roll a little bit. I wouldn't be surprised tomorrow or the next day to see some sort of little attempt to bump it back up. You know, whether it's, you know, maybe it's not going to be tomorrow because of the after hours, but somewhere in here try to bump it back up, and then you come back into something like this area, and then you roll back over and do the real test. And so, you know, some sort of a little stair step to the downside. A lot of times that's the way it sets up. So that's the general market. I think the small caps keeps telling us there's issues. The ones that are going to get hit tomorrow is the NDX. NDX will come back in and do a retest regen. Those retest regens are over here. They should test to the bottom of it, right? Because they will be within 6 bars tomorrow. Or will it be 1, 2, 3, 4, 5, 6? Oh no, we already had a test here. And so this will be the second test, matter of fact. And so the odds are slightly less than 50% it's even going to hold. So we should see some sort of a real hard test at that level 7773, and the other one is 7778. So somewhere around 775. All right, the other thing I want to point out before we get into the individual stocks that we're going to look at is the IYT. The Dow Theory says that you got to move stuff around to sell it. And what it basically says is you produce it, that's the industrials, you sell it, which is, I mean, you move it around to sell it, which is the transports. And this was a theory way back in the early 1900s. If I put in the Dow Jones Industrial Average, and I'll just use the index, EJI, and look at it, it's at highs here on the monthly, excuse me, on the weekly, and I'm pretty sure, it looks like I'm going to have to pull this up so I can get to this monthly. I'm pretty sure it's on the monthly as well. It just went over it and got made new highs. So we've got new highs on the daily, excuse me, the weekly and the monthly. Now, if we pull this one over and look at the IYT, it's not even close. That theory says that these two should move in tandem. You can have some minor moves, things move around, but basically when you're looking at intermediate and long-term time frames, they should trade the same. And there's more rules to it than that, but basically, you know, the idea is that you trade the same. You can't have a market go up with one of these going up and not the other. And so this also is saying something's wrong. And to dovetail the last piece of this, I'm going to throw in PKG. This is, you know, to carry this a little bit farther with today's technology, everything gets shipped, or a lot of things get shipped via the internet now with Amazon. And PKG is a good tell on that. And PKG is telling us there's issues. Here's the Packaging Corporation of America, which is one of the primary guys that sell all the material that you package stuff with. And you can see here back on the last earnings, they got hammered, right? That thing has ended up being a range. A lot of times when you get a big wide price spread anchor bar, which is what this one is, price will mostly stay for a long period of time inside that bar. And because you had a range up here, where do you expect the next range to be? To the downside. And so if this is true, and if this actually does trade to the downside, again, it's telling us that somehow, some way, something ain't right. Now, that's a far cry from what we see over here in the S&P, what we see, you know, in terms of new highs everywhere else. But again, these are things you just have to keep in mind and realize that, you know, at some point things change. Have they changed yet on the big indexes? No, they haven't. Will they? At some point. Is it now? Not yet. Is it getting close? Well, that's what you have to keep track of, right? Because when you get some breaks, you know, some setups to where potential swing point lows can all break together, then you can get more worried about it. For example, if I just take the weekly here, this is going to print a swing point low. You have a swing point low here. They're not that far apart. If we trade down in this area, it gets more dangerous. And so, you know, if this thing does at some point roll back over and get down in that area, you have to get a lot more concerned. Now, naturally, you're going to want to try not to ride this down 300 and then get concerned. So you'll look at the dailies, right? But the trends will tell you, and they'll tell you what's happening. And the first warning sign is always the retest regens. So the first one is always that. If this can't regenerate higher, it's telling you trend is not what you think it is anymore. Okay, let's go to the individual stocks here. So we have some picks that were asked for, so let's pop into those. I'll move this out of the way and we'll just go to this. And I'll just take them one by one. So first one here is CCK, Crown Holdings. I think they actually report earnings pretty soon. And let me see, I'm going to take, bear with me just a second, let me grab this back and put this to the side somewhere so it doesn't take up the screen, and look at my notes. Oh, I don't know why this one's in here. Did we not have this as one? I guess this was one I was looking at. HXL. I'm going to go to the next one because we weren't even going to talk about this. I think I threw this up here because I was looking at it for earnings for myself. So let's go to the next one where mentors are asking. HXL. So HXL, Hexel Corporation, bullish retest regen. So, well, you know, when you're looking at trend, you're looking at two things, right? What is the actual trend? The actual trend is whatever these arrows tell you. And so it's the latest arrow's up, it's red, that tells you suspect bullish. That means that when it crossed over this swing point, it had less volume. And so if I take the volume on that, compare it to the volume on this, there's less volume. That's why it's red. Doesn't say it won't continue. Red doesn't mean it's a, you know, stop. It just means that it has a little lower probability of continuance over time. As we come back, we're going to do a retest regen. We're always going to compare when we do that. We're going to compare it to two things. Well, actually three things. The first thing we're going to compare it to is we're going to compare it to the volume, whichever was higher on the move. In this case, this is the breakout bar. This is a swing point high. We've already said it's red, so we know this one is the highest. The test back into here, we want to compare volume to this one. So in other words, if volume were to expand up to here, as we come back into this, that would give me a lot less confidence that the retest regenerate is going to hold and regenerate higher. I would have less confidence in that. If it comes back and volume's really low, which it is so far, and it gets back into here, and then it just kind of holds and the volume doesn't expand, the retest regen has a better chance. The other thing we look at is how long does it take to come back. So in other words, when this broke out, and let's get the price point, that swing point high was 79.41. The bar after it didn't trade into it, so we've traded more than 6 bars across since this thing broke out, which is right there. Time is important, right? So if the time is greater than 6 bars before the test, probabilities go up quite a bit, a lot actually. And the other thing that happens is more than likely when you do the retest regen into this area, you will probably only test, because it's more than 6 bars, you'll probably only test, or should, I should say should, only test the top third. And so as this comes back, I should expect it's only the top third, and then it should regenerate from there. If it tests deeper, that's a sign that it's weaker. If it just doesn't even test it, of course it's even stronger. If it tests into it and does the flip around and comes back up, it's what you expect. It's doing what you think. That gives you the idea that you can buy it. Now in this particular case, there's always extenuating circumstances, or potentially. You've got this huge bar on this bar, which happens to be congruent with that bar almost. And so as it comes into this area, which it did today, but as it comes into this area, that price point today was 79.60. Again, the top over here 79.41, bottom here 79.53. I would think tomorrow it probably tests into there, and I would expect it not to get very far and attempt to turn around and generate higher. That's where you try and buy it, and then you have to decide your trading plan. Am I on this time frame? Am I on a longer term time frame? Whatever the case may be. I didn't pull up the longer term time frames. I glanced at this earlier. It's at new highs everywhere. And so what you're trying to do is gain an entry on a stock that's, you know, fairly strong, and that potentially is going to keep going. And I'm going to pull up the cube to see how extended it is. And so it is extended here. If I see that, then that tells me that this buy here, if this is what I buy, this buy here is probably going to be a flip, and I'm going to try to flip it for a small gain back up to here. Most likely, if it gets up there and just keeps going, of course I'll keep it. But if it gets up there and stagnates, then I probably flip it and sell it. Why is that? Well, because as this gets up into the 80, 85, 90 range, it's extended. And that means that more than likely it's either going to go sideways for some period of time and eventually break a swing point low, set up a swing point low and break it, because that's the only way this will change back to sideways, and then start to move higher again. So long term, this thing looks great, right? It's not extended here, not extended there. This sector is not great. I mean, it's bearish sideways, but it's bullish short term. And so it's okay. You know, sector's not bad. This is supporting it. The only thing that's bad right now is this, or the worst thing about it is the extension. And so that says that you can't expect this thing to just keep going up. It's probably going to trade sideways. If you're trading it here and trying to edge into it real quick, right, you got to take what they'll give you, and then you just have to look at it. Where would I put my stop? Where can I get in? You know, is it worth it, right? That's when it gets to the whole trading plan. Like if my stop's down here and I'm only trying to flip it there, maybe this isn't a very good trade, right? So those are the kinds of things, you know, that would mean that I have to buy it like here to even make it have any chance of being worthwhile, right? A 1-to-1, very high probability 1-to-1. And those trades are okay. They're just different trades. You have to be recognizing what you're going to do. Okay, so that's HXL. I think it's okay, but at the same time, you know, I don't know. You know, it's an okay stock. It's probably going to trade, do what you want. I just don't know if the trading plan works. And that's the sort of thing you have to work out. I don't know what hit this one. KMX. I think earnings was on this bar, if I remember right. I'm pretty sure that was the earnings bar. So they got hit on something here, gaps down. But what's interesting, this is an interesting chart. Again, what's the trend? Trend is up, right? You see it here. It's a breakout. Trend is up. What is it testing, right? Once it gets over the retest, once it gets over the swing point high, which is here, as it comes back, what is it supposed to do? Well, it's supposed to be a full retest regen. In other words, it should trade into the bottom third of this bar. So if you bought it here, you're expecting the top third. The top third is not what should happen. It should test the bottom third. So what do? You be patient. You wait. It regenerates. Okay, or here. So now you're thinking, oh, I missed it, right? And then next thing you know, it's back down there where it ought to be. And on the second retest, it definitely should be down here. So the first time, stronger than you think. Second time, doing what you would expect. And they bought it, volumes a lot lower, right? We were talking about volume earlier. This is the big one. Volume a lot lower, flips around. You could have bought at the bottom of this thing. Once it flipped around and got back up in it, and you saw it was probably going to stay. And this could have been a flip trade, or this could be something you're still in. Stops have to be below this area somewhere. And I guess, you know, when you do that, you got to go looking. I would guess down here someplace would be stops. Let's look at the rest of this. Let me go to the weeklies. So the weekly's got a retest reach in. How many bars? It's within 6 bars too. The smallest one is here, so you'd expect it to trade into that area. That area is about 80 as well. So going back over here, it was about 81. This guy is about 80. And if we go over here, if it does trade into that, that's 81. That would says this one could get deeper. So this trade is a little bit harder because, again, it depends on your time frame. If you're trying to trade very long-term time frame, then you want to be even more patient before you step into it. If you're trading, say, a weekly time frame, then you could try and step into it around that 80-81 area, which would be consistent with what you saw here or may see here. In other words, another dip and that flips around again, or I mean, that's, to me, it's the trade if you're going to take it is in the 81 area. It's probably in the 81 area. So as you come back into this one on the weekly, and back into maybe a test of that low that flips around, but you really don't want to see this fail. If you're trading daily, right, you would want this to hold, which it did the first time. And so depends on your time frame. If it gets back to here and can't break down, then maybe you buy it on the daily and put a tight stop just underneath there. If you're playing your weekly, it's a different trade. You put stops deeper and you try to trade into that before you buy it. If you're doing that though, I mean, recognize, this is the thing that's hard to teach. If you trade underneath this thing and you're buying it on the weekly, you're gonna have to allow it more time, but it's probably not going to just because it's broken here. That, say, within the next 3 days, it's probably not going to just take off and go to new highs, or the next 5 days on this time frame. It's just not probably going to do it because it broke this, and that says that what was up is sideways. And so you have to recognize that a bounce into this area here is where you want to trade it. You want to sell it, or at least sell some of it, right? With the idea that you could probably buy some more back later. So if you're trading on the weekly time frame, anybody that trades on the weekly time frame ought to be trading at least the weekly, but also probably on the daily. And the way I usually say it is that you probably want a core position, and then you want a trading position. And so the core position is your weekly time frame, the trading position is your daily time frame. And so you take the trade on the core, right, on the initial entry, and then you flip some of it out, and then as it comes back again on the weekly, you add to it again and you make your core bigger. And these are the kinds of things that you try to do over a period of a few weeks or months. And so you can trade that one that way. This is an okay thing. I don't know what drove this, but it did behave good. So a lot of times you don't have to know why. You just need to know what it did. KMX. This actually was on my list. I was watching it too. LSCC. This is a chip, I believe, lattice semiconductor. Okay, so the comments on this one is. Oh, this one's interesting comment. So let's go from the top. Big move up, bullish on the long-term time frame. Go to the weekly time frame. What's the last trend? It's sideways. How can this be sideways? Well, because it went bearish here, and when you flip over a swing point high, you just go to the next thing up, which is sideways. But if I look at this clearly is not sideways, right? I mean, this thing is bullish. So what's the deal? Well, the model is not going to catch everything. The model is meant to catch most everything, 85–90% of everything, and to not give me false positives. And so when a decision was made when we built the model, that when we did swing points, these L's and H's that you see, the criterion was that it was very close that it could be a 5-bar count or a 6-bar count. The 5-bar count worked almost as well as the 6-bar count. We went with the 6-bar count. Why do we do that? Because 6 bars gives us less false positives. And so sometimes you'll get this kind of setup, and you just in your mind have to say, okay, that's not really what it is. It really is bullish. And so you just have to adapt and correct the model in your own mind. Yeah, that's the other piece. Yeah, one of the mentors is saying that when you can't print a swing point high, you had one here, but all the way up here, you can't print one. What does that tell you? it's much stronger than you think. Right? This thing's strong. You know, if you can't get 6 bars of a retrace before you make a new high over that bar, that's telling you this thing just keeps seeing money come into it. The buyers keep coming. They're willing to pay up, 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 up. Right? That's what we're doing. We're measuring supply and demand on the charts. Right? What's the supply and what's the demand? The demand here is so strong it can't print a swing point. Therefore, you're stuck in this sideways because of this big bar up. Okay, so that's why this one is as it is. As far as what do you do about it, you know, you can find a way into it. You know, most of the time, something is very strong. You have to come back to this time frame and find it. Your swing points are here. Retest the regen into those, especially after 6 bars. The low is 38. The high here was 37. So 2, 4, 5, 6. This would be a 6-bar retrace. Anything into here is probably the buy. And you've also got good support in terms of volume there. So that's the way that one sets up, and that's why it shows this sideways. All right, let's look at the next one. So this one I brought up because this one is going to get hit tomorrow, is Netflix. Now Netflix, I think they were down 40-something points after the bell, 44 points or so, because they missed their sales, or not sales, but their subscriber ads. Yeah, it reminds, you know, I saw this after hours, and I was looking at the, you know, the notes from the analyst, not the analyst, but the actual the release, you know, the earnings release. And it reminded me of the 2000 area where we were counting out by eyeballs. You know, on the internet, everything was, you know, how many eyeballs do you get on the internet? And now that we're counting, you know, how many new subscribers, you know, it's like, okay, I mean, that is important because that does generate revenue. It's better than eyeballs, I guess. But it was just harking me back to the 2000 period. So this thing's down big. Okay, so the reason I brought it up is I was going to ask myself, where would I try and buy this thing? So it's not going to be worth looking on this chart because it's breaking everything you see here. This thing is trading after hours, and we'll see tomorrow if it trades here, but I suspect it will. It's trading down here somewhere, right? So everything here is going to get blown away. So why would you even want to trade it? Well, you can bounce trade these things. There's going to be a lot of volatility in it. And so if you have the wherewithal and the desire, you know, you can pick up 300 or 400 shares intraday, and you can flip them for $1,000 or $2,000. And so, you know, if you have that ability and you want to do that sort of thing, those trades are available. So how would you find where this thing might trade? Well, it's been trading in this range, and this was not a stock that I would have shorted because it was potentially, it had been range trading on a trend. And again, here's a sideways trend. It never has broken this swing point high, but it's a sideways trend, and it's been in this range, and it's been in a pretty good range right in that area, right? Well, tomorrow that area is going to get expanded, and so if we just take that and double it and move it down, we can get a measure. And where's the measure? It's about looks like about 298, 299. The other thing that's at this price point is the bottom of this bar, which is 301.65. And so the bar I'm talking about is this bar right here. You got some volume on it, right? And it's also coming back into a swing point high. Okay, so what's a swing point high down here tell us? Well, this is a retest regen, right? So when we think about trend, this is something that if we've traded higher, more than 6 bars, which we've gone way more than 6 bars, when it comes back, it should trade into the top third and regenerate. Okay, and I didn't quite get that right. Let's try it one more time. It should trade in the top third and should regenerate from there. Now we could figure out what that number is. This thing is what, 303 down to 278, so that's 12 and 3 is 15, so that's $5. That's 298. And that zone that we just printed, you know, the doubling of it is about 298. I did this work before I came on. So 298. So where would I want to buy it? Well, you know what? somewhere between 301 and 298. Will it get there tomorrow? I doubt it. Will it get there Thursday? Probably. Thursday or Friday maybe, right? Because you'll probably see a big bar down, and then you'll see, you know, wherever it comes to, and then you'll see some sort of a jagged bar underneath it the next day probably, and it does an under over. And that is a good buy. And you can flip this thing for 15, 20 bucks probably. But you have to go into the trade saying, I'm going to flip it. I'm not going to try to hold this thing. I just want to flip it. You flip it back in the bottom of that bar. So that's Netflix. PVG, this is a gold stock. Now this stock I actually owned and sold it too early. So my mistake. But I did keep PVG. It's the Pretium Resources, which is a gold stock. This guy I actually owned, and unfortunately it took this huge, I owned it back here. I was banking on another breakout back here myself, and I didn't get it. And honestly, I didn't hardly make anything. I ate some of it down here, and then I sold some. Well, that's not quite true. I sold some here and then had to eat the rest is what happened to me. But eventually it turns, right? Gold goes crazy. This thing, the point on this was, one of the mentors was asking about this one. This thing has this enormous ABCD, right? That's just like off the chart on a weekly time frame. If you look at it on the monthly, it's not going to happen though. And the reason it's not going to happen is you've got this that's going to stop it more than likely. And so the target is really here, short term. That ABCD that's on the weekly, don't get fooled by ABCDs. Most of them will complete once they start, but some won't, and the ones that don't, I wouldn't be surprised if those ones that don't are ones that are so big that it takes forever to get there. And this is probably going to be one of those. And so I would think that what will happen is this thing will flatten out and you'll see it trade back and forth is the way it will probably work out. And then if gold stays bullish, eventually it goes up and hits its target. But right now, I think the target is this number, 1190, and you're almost there, 1121. May get up and test the highs, but I think that's gonna, the breakdown bar's top is usually. And when I look at these, you know, this is a wide price spread, heavy volume bar to the downside, right? It's an anchor bar. When you get those things, what did I say earlier? They usually trade inside those. So when it gets up to the top, it's probably, you know, it could get over it, but it will probably come right back into it. And then you'll have a new range at the top of this big range. That's where it will just bounce around for a long time until it eventually continues on up, if that's what it's going to do. And this whole sector is bullish. I didn't point this out. I'll throw it in real quick. Here's another one in the sector. This is one that I do own. This is my favorite in the sector. It's FNV. This is Franco-Nevada. These guys basically are a finance company to gold companies. It broke out today. And it's been bullish for a long time. You can see all the bullish ones, right? This thing's been bullish since back here, long before gold broke out. But it's just a extremely strong stock. I brought this up and noticed this way back in, I can't even remember when I did the money show. This was back in Vegas. Had to be 7 years ago now, 7 years ago. I brought this up as my top stock idea back then. It was trading down here, you know, I don't know where it was back then, but it was a lot lower than it is now. But they broke out on all time frames. Gold looks good. Gold is a place to be. Silver, you can also look at silver. Both are good places. Last one here is TJX. Let's look at this one. So let's see, what is the mentor thinking on this one? Earnings August 14th, hot sector, and looking for a retest regen, it looks like. So let's see what this looks like. So there's an ABCD, looks like it completed. Okay, so now this one worries me a little bit. Okay, and the reason for it, when I'll go to the monthly and then we'll come backwards. All right, so what's our trend? It's up, that's good. It's testing new highs, that's great. I don't see anything here to be concerned about greatly, other than you're playing with 5619 and we're right at it. So you're playing with the breakdown bar, which has more volume, but volumes here aren't huge. If I go to this one though, it didn't quite do it. 3 black crows, you know, you got this one in the middle, but this kind of action, right, usually you'll see them crawl back up and then they'll stagnate for a while. They don't always stagnate very long, but usually they'll stagnate for a while. And so when I said, you know, that's what I was looking at when I said that. Got a swing point high here, here, and here. Broke alpha. This one went bullish, confirmed. So the volume here greater than the volume there. But the top of this is 18. It's 30. This is a weekly. I would be careful here, and I would really actually want to buy the retrace on this. I really wouldn't want to buy the breakout, even though it's breaking out on multiple time frames. It looks like, yeah, you've got a breakout here and here last week. So what I would be focused on would be the retrace and trying to buy the retrace. And so I would be looking somewhere, you know, on this retest regen, if it comes back somewhere in the bottom third, which would be down here. And the reason I would do that is because then I can make the numbers work. In other words, I can keep my stop reasonable, probably this big bar's high, which is there. So my stop could be, you know, 53-ish somewhere. And then, you know, that gives me a reasonable chance of staying in the trade. It shouldn't get below this. If it does, then the trade really is sideways, which we're worried about potentially over here. And at least I can work my way back out of it and make some money. So I want to be careful coming into it because of that. If I go over here, that's 53. What's the number on that? It looks like about 50, maybe 54.80 or something, which happens to be this swing point high. That would be a break of this one though. So this would also say it's going to go sideways, right? If it breaks that one. Yeah, it's a tough one because it probably will hold these, which coincide with the one we just talked about on the weekly. It'd probably be somewhere in here. But you've broken this one, which tells you that what was up is probably going to be sideways on you, right? So is it worth it? I don't know. Let's look at the cube too. Let's see what the cube looks like. It's new though. And extended on the long term. I don't know. Yeah, it is last week. Yeah, if you're not going to hold it through earnings, the earnings are the 18th of, excuse me, August 14th, right? Yeah. So roughly 3.5 weeks, right? Yeah, you almost want to see it hold this. I guess I would force it to hold this before I even bought it. But the problem is like, where do you trade it back to? How much are you... If it forms and fires, right? And that's true. It's just, yeah, I don't know. I'm sorry. What bothers me is this bar. So, yeah, that's the only thing that really bothers me. And you can see, you know, that's probably going to be an issue for it. So, I guess if you take the trade, you take it on the daily, you're coming back within 6 bars, so you should trade at the bottom third, right? And so you trade it and try to pick it up just underneath this area. So you try to pick it up right in there, and then you don't have to give it much. You know, you got a swing point low here. You got the next retest regens there. It really should find support in here, even if you're in early. So worst case, it flips back around and you can get out. If you're right and it flips around right there, if you don't get the breakout, then you just have to take what you can get in front of earnings. And you're in a, you know, sector, we just looked at the cube, sector looks fine. The stock looks fine, it's not extended. And we do potentially, if it does work, right, you do potentially have that ABCD, right, that would set up. Well, the retrace would be deeper here, but then it would set up for you if it breaks over it. Yeah, you can trade it, but again, a lot of times you take these trades, it's not a bad trade. A lot of times you take these trades with the idea, right, because you're, there's two things to the trade. One is, what's my reward to risk, you know, how much am I, you know, risking for how much I'm trying to get out of it. And in this case, if it doesn't work, you're not getting much, but if it does work, it could be fairly large. On the flip side of it, what's the other thing? It's the probability of success. You know, how successful do I feel that this will be? And the probabilities are pretty good. Matter of fact, they're very good. A retest regen, you know, because of the way this is set up, even though our probability will be somewhere around 68 or 9 or something, you know, you've actually got other things below it that will probably help it as well. So you can probably, you know, assume this is the light end of the scale. It's probably a little bit better. Yeah. Okay, so that's not bad. All right, well, that's that for today. So let me cut that off and save that for everybody.